Going on, everybody, today we're in a brand new video. If you clicked on this video, then it is probably because you want to know whether or not to buy PayPal, and that is exactly what we're going to go in today. So first of all, what you will be able to see is that they had a huge jump yesterday, because they beat earnings. They're up 8%. I'm talking perfect guidance. I'm talking they beat everything. They're up like 7%, up another 2% today. So that's a stock that is right now at a pretty low, right? So that means the question pops up: is it a good stock to buy now? Are they on a low? Can I get in, right? So that's what we're going to look at. So first of all, let's go into the history of PayPal. So first of all, their CEO, their president and CEO right now is Alex Chriss. So prior to joining PayPal, Alex held various roles of increasing responsibility of Intuit. Intuit, which is you probably know Intuit. He most recently served on Intuit's executive leadership team as the executive vice president and general manager of Intuit's small business and self-employed group, where he led global organization. Right. So let's look at this, right? The time where Alex was at Intuit, their revenue, they had perfect revenues. They had like 1 year down. So that already means that he's probably a good leader. So sort of forget everything, right? Let's start off fresh. So when we go into this stock analysis, I want you to keep in mind that it's a company with a PE ratio of 16 and a market cap of 70 billion, right? So a couple of things here. So I just read a Forbes article, right? Can Apple survive Apple's rapid ascent in digital payments with Apple Pay? So I thought this was going to be an unbiased piece of writing from Forbes. But then you go at the end and it says the writer owns Apple shares and is short on PayPal shares. So what you read on CNBC and on Forbes is not everything. That's what I'm saying to you. So let's look at their revenue. So that's the Q2 snapshot, the one they just released today, yesterday. So the total payment volume is up 11%, and the revenue is up 8% to about 9%. So first of all, it's a stock that's in fintech, and it's growing 8 to 9% basically every single year. Is that worth a P ratio of 16? I think it's a bit low. Anyway. So here their expectation. They're gonna expect for their Q3 2024 another mid-single digit growth, which is another like 5 to 10%. What they're doing every single time basically, and then high single digit growth in non-GAAP EPS. The full year 2024, they expect a good EPS, and they expect to get a lot of shares back. So let's take a look at their revenue, right? So that's their revenue. They're growing. There's nothing you can say about it. Like that right here is 8%, right? So here they were at 8%. I mean, they're growing. They're not stopping. They're always going to be from 8 to 10%, something like that. So they're a growing company. They're a growing company, and that's not worth 16 PE. That's worth like 25. Right? That's worth 25. Apple, they just stagnated their earnings, right, in the last couple of quarters, and they're at 35. But let's look why the PE ratio is so, if I might say, shitty, right? So their PayPal payment volume is growing. It's growing. The competition is not killing the total payment volume at all, right? We're seeing huge jumps here. And actually, that is the only thing that's driving their revenue. Why? Because finally there is something for the bears to say. There is something for the bears to say. They're decreasing in annual users. That's their peak. They just hit their peak. However, their total payment volume is good. So they're doubling down on existing customers. So if we look at the account and activity metrics, right, so you can see active accounts, year-on-year growth, they're down 1%. That was Q1. Their monthly active accounts, that's up 2%. But here, transactions per active account, year-on-year growth 13%. They are doubling down on this. They're doubling down. There's nothing you can say. And now let's look at a competitor. Let's look at Visa, right? So keep in mind that's a stock right here. Keep in mind that Visa is trading at basically twice their PE ratio. So let's look at this. Let's look at this. So here, in net revenue growth, right? Change, here, Visa wins. 10% versus 8%. Net income, they win again. JAP earnings per share, they win again. They're growing faster. But then when you look at their non-GAAP net income, PayPal is up 28%, and then their non-GAAP earnings per share, PayPal is 36% growth. So that's not bad. Additionally, look here, the payments volumes is up 11% versus 7% for Visa, right? So is that worth 2 times more? I just don't really think so, right? Yeah, I don't really think so. Now let's go into let's basically go into a little earnings forecast to then go ahead and see if the stock is overvalued and do a prediction. Right. So EPS 521. That's what they expected for the year 2024. We went in for 10% EPS because that's the least they will be able to generate in terms of growth in EPS, which will mean that in the year 2026 it will be at 6.25 earnings per share. So EPS 2026, right, $6.25 earnings per share, with PE right now of 16.78, which means that in 2026 their estimated stock price is, drumrolls please, 104, which is big. Like, that's good. And if they do manage to sort of continue with their growth that they're having, right, and their annual users sort of start to grow a little bit, they're not going to be trading at 16p. They're going to grow at 30, minimum at 30p, just like Visa, right? So that means that they will be times 2, so they will be at $208 per share, which is a huge difference to the 66. So in conclusion, it's a good play. It's not the safest stock to buy. You know, I've got some pretty safe ones that I really like SentinelOne. But anyway, it's a good stock to buy right now. It's a play. It's a play to buy, right? And additionally, with the earnings that they had, right, with good guidance, right, with good earnings, I don't see how this could be a bad investment. So overall, I'm not buying yet. I'm gonna dig deeper into it. But if I had to buy right now, that there wouldn't be a problem because I think that they're actually gonna go up. So anyways, do your own research and yeah, peace.